Okay, what is the total cost of borrowing? So now that we understand amount owed and new credit, thank you. I appreciate that, Miss Karima. Okay, so the total cost of borrowing, let's take a look at an example. If I borrow $20,000 at a 10% interest rate for 7 years plus the fees include origination fee, application fee, prepayment penalties, late payment fees, right? I'm looking at a total cost of $27,889.99 plus any fees. So, 7 years of debt at 10% interest cost me $7,889.99. I want you to start getting familiar with that, idea that interest decreases savings and increases debt. So, in the example of Miss Heidi, when she bought her bag, the goal would be to pay down that debt to 30% by the next month. And if she's only paying up to 30%, then she needs to understand what her credit card APR is, what her interest rate is, so that she understands what it's actually going to cost her, right? Because we know that Miss Heidi bought a bag for $500. But if it's 10% interest, right, then that's a new fee and it's decreasing her savings and increasing her debt. So that's the big picture. That's what I want to leave you with. Now, when you look at a mortgage loan comparison for a $150,000 mortgage at 30 years, 6 and 7, and y'all, please, that trend, that crazy, y'all, I had to do it. My sister keeps me cool. She's 18. So she, she also just took this class, by the way. So if your kiddos are 18, 10 out of 10 recommend this class. It is a lot of information, but it's a great place to just set the tone for what they can expect as they start preparing to do the life thing, right? So she did the class and she's actually participating in the Match Funds for Credit program. And she had to open a bank account. So she got her first bank account. She's officially an adult, almost. And then she also just got her first secured credit card. So now she's going to start building interest, and she's 18. So she's just starting here with Avenue, really building those concepts so that she can have strong understanding of how interest is managed, debt is managed. So from 6%, right, we see a real difference to 7%. At 6% interest, this $150,000 mortgage loan is going to be $899.33 of monthly interest. At 7%, that same loan, $997.95. So, big difference, right? $100 nearly. $98.62 is the actual numerical difference between the 6% and the 7%. So, really understanding that our goal is to continue to decrease debt, increase savings. Once you get that concept, you can understand why it could benefit you to work on increasing, your savings, or maybe working for 3 months on your credit so that you have an increase of a credit score and can unlock better interest rates. Okay? So that's really the difference. I always tell clients it's not a matter of if you can apply today or, you know, can you apply today? Because you can. Anybody can apply for a loan right now. We can all apply for a loan. The question is, what is the loan term going to look like with your current income, current debt, and current savings? What are you unlocking with your current financial snapshot? That's really what makes the difference between am I, like buying the house in 30 days or waiting 6 months for a better interest rate, maybe increasing your credit score so that you have access to better financing that will not cost you too much in the long term, right? Because this is for 30 years. So you can imagine that for a 7% interest loan at 30 years, $997 over time, you're buying a home, let's say $150,000, and after 30 years, you're paying $209,000 in interest. That's a big, that's a whole new house, right? So really understanding that it's not, can you apply? It's what do my loan terms look like with my current financial snapshot? So even with a 1 point difference, you're saving $35,506.07. Okay. Sample credit report on pages 36 and 44. Oh, I'm going to stop real quick and go back to the slide. I have a question from Peace. P&I is principal and interest. At one, Miss Cheryl from Prosperity Bank, she is our lender presenter today, and we are going to bring her in. She's going to talk about what principal and interest are. It's called PMI, and so she'll also talk about PT, PITI. So stay tuned for more in when we come back after lunch. Okay. So with the sample credit report, what we're looking at is page 36 and 44 in your ebook. These will include identifying information. It'll have a credit summary. It'll have credit details, public records, and inquiries. And this sample key will tell you specifically what each number means. So when you're looking at your credit report, you understand that there are specific details that tie this report to your social security number, your addresses that you have on file, and your name, right? Your date of birth also matters. So all the sample key, like for example, number 9 says authorized user accounts, displays the number of authorized users found. It tells you like how many people are actually, like if you have an authorized user, right? Do any of you have authorized users on your credit cards? Raise your hand. Oh, and then let me stop sharing this poll. Y'all. Okay. Okay, no. Nobody. Okay. When you add an authorized user, they benefit from your credit. Or if you're not, keeping up with your credit history or credit profile or making your payments on time, then the authorized user will also be impacted in that same capacity. So it's important to know that when you're getting ready to co-buy something, you're assuming that loan, but it's not the same thing as being an authorized user on somebody's credit card. No, Brenda, it is not the same thing. Brenda asked, is it the same thing? No. Being a co-buyer or being a co-applicant or a co-signer is not the same thing as being an authorized user. An authorized user is able to use your line of credit as their own, and then they are able to set up their own card while still using your same account. And then a co-signer, like let's say I'm about to go co-sign for my sister, and then my sister, she gets a car, and then suddenly in a year, she starts falling behind on payments. Those missed payments are going to impact my score. Okay. Sometimes people sign off for things and not realizing like how it all plays in. So my sister's car note is also going to show up on my credit report as my debt. So when I go apply for a loan, remember I talked about my debt to income, which is literally my debt compared to my income. So it may show to a lender that I have really high debt compared to my income, and I may not be eligible. So it has happened where you have to go back and refinance a car under somebody's name so that it eliminates from your credit profile and doesn't show as your debt. Because guess what? If that person starts missing payments, you are now responsible for that debt. Okay? So these are, this is one credit report. There are several types of reports, and they all will contain the same types of information, but they won't all look the same. Okay? So if you're going to pull it on annualcreditreport.com during lunch, you'll see that each of the 3 reports looks different. but they all contain the same information. We will go through this during our counseling in more detail because it'll be individual to your credit, right? Let's see. Let me see. I'm speeding through to just make sure. Okay. Let me see. We have time to go through everything. Okay. In the same sample key, we look at 21, 22, 23. This is all where the credit history shows disputed items. So remember I was telling you that if you dispute any debt, to understand that there will be an investigation. And I'll tell you that that investigation takes about 90 days, right? And once the creditor determines that that is your debt, it goes right back on your credit report and it's going to show as your own, okay? While it's in dispute and under investigation, a lender will look at that and tell you that we will have to wait until this is resolved. You guys can ask Cheryl this, okay? So just remember, you can ask Cheryl. She's a lender and works with Prosperity Bank specifically, but she's here to represent the education part about lending, not necessarily the. She does not represent the bank in this class. So she's an educator, and then you can ask her about that more specifically. But yes, under the Fair Credit Billing Act, you can dispute billing errors, and they have 30 days to acknowledge a dispute. So remember I told y'all my client last week, we submitted a letter. We haven't heard from them, and it's been over 7 days. So we're tracking that timeline, right? Because then after that, we would then reach out to the credit bureaus, right? And it could be escalated all the way up to the CFPB. If you've never heard of the CFPB, that is the Consumer Finance Protection Bureau. And so they are going to, acknowledge your dispute. And so make sure that you understand that if you're disputing any billing errors, that they are in fact inaccurate, so that you can conclude a positive result at the end of that investigation and not just hold up your debt, hold up the process of obtaining that financing for the lender. Does anyone have any questions here? You can just come off mute if you do have any questions. Okay. Looks like we're good. So you will be able to see your account history throughout the report, right? So it'll look like last activity date, name of company, the type of account, how much the balance is, date of last activity, whether it's been late, how often it's been late. So all of this is on your report, and all of this is what tells somebody, like a lender, if you're a risky borrower or not. So based on all of the behaviors, back to the question on the poll that asks if lenders use the report to predict behaviors, that is a fact. If you have broken leases, if you have leases that have been placed in collection, that definitely tells a lender a story. So at that point, counselors are here to support you through that process of creating letters of explanation to explain. In that example, yes, I've had a lease that has been broken and it's not been paid. This is the situation of the why. Here's my plan to avoid this in the future. So really, a letter of explanation can be used to support your loan application, but it cannot guarantee that you will be financed. Past due amounts are also displayed, okay? And then creditor names also are included. So sometimes, just yesterday, I had somebody not recognize a line of credit. The name of the company was not familiar to him, and we were reviewing the credit report. So on that same credit report, we found their number listed, and he was able to contact them, and is just in the process of verifying that. We didn't hear back, so it's Friday, but we're following up on Monday. Okay, so we will continue to cover in more depth the credit report during our counseling session. But again, I'm opening up the floor to anybody that has any specific questions. We are making great progress with our class, so I just want to make room to just have a quick Q&A if you have any questions. It could be about anything that we have covered up until this point. You have the chat, and let me check the Q&A. I think everybody's doing good. I don't see any new questions. Rosalia, do you have any announcements you want to make?
I have 3 people who have not yet checked into the chat. If you can please do that. A reminder that it is a part of the requirements for you to receive the certificate of completion. Otherwise, I will be reaching out directly via text or call. Thank you.
Yeah, perfect. All right, so everyone is logging back in, typing their name in the chat, and that's how we continue to take attendance, y'all. It is an 8-hour commitment, and in order for you to be issued a certificate on Monday by 4 p.m., we want to track your participation and your attendance. So please continue to type in your name every time you return from break. Okay, so let's see here. There are codes as well that tell you whether this is an individual account, a joint account, an authorized user, whether this line is shared. Sometimes people don't have any credit, so nothing will show. And then under the Equal Credit Opportunity Act, it means that there's no discrimination when applying for credit, right? Everyone who applies for credit is measured not on their personal characteristics, rather their FICO credit score and their credit profile. That's how they can guarantee that they're making decisions based on your financial scenario, your current debts, and not whether you're a single mom or whether, you are receiving disability benefits, or whether you have 3 jobs, right? Like, or whether, sometimes we're like, hey, I promise I'm good for it. I promise I will repay you back. Unfortunately, right? That can't just be taken at your word. So a FICO model was created and credit histories originated to really evaluate you, your behaviors, more specifically managing your debt. Okay, so Equal Credit Opportunity Act means that there cannot be any discrimination when applying for credit. If I am a short lady and a lender, and I go to the lender and they're like, no, sorry, we don't give short people loans, they're violating the Equal Credit Opportunity Act. Truth in Lending Act means that their standardized loan documents, they are going to disclose a lot of tiny little disclosures that sometimes we'll just breeze through. And I see a lot of this happening, like a lot of confusion happening, because a lot of the times when you're receiving a bunch of documents, you're just signing. You're just like, it's DocuSign, so you're just click, 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 click. And that's something we all do, right? I do it. I know I've never read Facebook's terms and conditions. Has anybody read Facebook's terms and conditions? Snapchat, Instagram? All right. Those are public facing social media platforms, right? And they're free right now to use. Unless you're like on X and then you're paying to get verified, or LinkedIn, where you pay to verify your account and stuff like that. But all of those platforms are free to use, and they don't carry any weight if you stop using them. But when you're buying a house, the Truth in Lending Act means that they're going to disclose all of the fees from the beginning. So somewhere along the line, when a lender starts to submit documents on your behalf for down payment assistance programs or other sources of assistance, borrowers can get lost and can get confused about where they're getting the money from. For example, I had a client who was buying a duplex. She actually purchased a duplex, so hooray to her. She started with the class and then did counseling. During counseling, she's like, I'm about to close. And I'm like, okay, girl, show me your disclosure so that we can review it together and see what all the benefits you're getting. And she's like, oh, I haven't gotten that. And I'm like, okay, well, can you ask your lender? Okay, she asked her lender and she's like, oh, she said that I won't have a closing disclosure until I'm under contract. So she hadn't even gone under contract for this property. She knew she wanted to buy it, but she did not have a contract, a valid contract that secured that property that she could go into with an inspection to get an inspection report. So it becomes a very confusing process when there's a lot of papers being thrown at you and you're working a 9 to 5 or you're working full time or you're working 2 jobs. It's a lot of paperwork. So it's important to understand that the steps that we outline at the beginning of the class are going to remain consistent. Understanding that your lender is there to support you and it does not actually represent your investment is really crucial to knowing that this is your transaction, right? So, for example, Ms. Geraldine, when you start working on buying your home, only you could say if this is the best loan based on your living expenses because the lender isn't actually going to look at your living expenses. They're not going to ask you for your housing counseling budget, right? They're not going to say, show me what you spend on every day. They're not going to see the help that you give your family. They're only going to see your gross. They're going to say, this is how much you're grossing. They don't calculate deductions. They look at gross. So all of that to say it can be a very confusing process, but the loan documents are very specific and you should read them because this is your first big investment. So all of my 20 attendees here will be reading their documents to understand what the fees are so that there's no hidden surprises at the table when you're coming to close. Same client also had gotten a pre-approval and she is in healthcare. So she qualified for a grant under the Texas State Affordable Housing Corporation, TSHAC. TSHAC has a program for hometown heroes, right? So they have specific qualifications for healthcare employees, police enforcement, and firefighters, etc. So she could benefit from that, right? And that was something the lender was already working on, but she didn't know it. There was also one more thing that she could have benefited from. So TSHAC also does a mortgage credit certificate, which gives you a rebate on the interest that you pay every year when you file your taxes. There's a lot of benefit to just making sure that you're reading through your loan documents and then holding those lenders accountable, holding all of the parties accountable for truth in lending. So that whenever you start the transaction, those fees, those standard fees, like for example, your appraisal is $635, it doesn't become $1,500 later down the line, right? That's hitting you by surprise. But at least you've read your documents enough to understand, hey, you charged me $635 at the beginning. When did this change? So you can ask those questions. The Fair Credit Billing Act means I have the right to know what is in my file. I have the right to dispute incomplete or inaccurate information. So, again, Fair Credit Billing Act means I have the right to dispute incomplete or inaccurate information. Access to my file is limited. So your employer can't exactly ask you what's in your credit report or run your credit report for you when trying to decide if you are going to be hired or not, right? So your access to your file is limited to those that have a credit decision to make or when pulling a soft credit check. And you also have to authorize it, right? You have to have written consent or verbal consent that you're actually giving your authorization to have your credit pulled. I want you to remember F for fairness and A for accurate and privacy. So the FCRA, Fair Credit Reporting Act, I know I jumped ahead from the Billing Act, but the FCRA is just making sure that you understand that you have a right to dispute incomplete or inaccurate information. Okay? The FCBA protects you from unfair billing practices. This is on pages 56 and 57. So FCBA means I can dispute billing errors, and creditors have 30 days to acknowledge a dispute that I follow. So if I'm emailing a creditor disputing something, they have 30 days to respond to me. Otherwise, it's a violation of the Fair Credit Billing Act. All right. Also, under the FCBA, you have 60 days. So if you know that an error occurred, you have 60 days to dispute within this, like from the moment it happened, 60 days from that, to have a valid dispute. If it's after 60 days, it will not be valid. And then 90 days for a creditor to investigate. This is all Fair Credit Billing Act, okay? And then one more on there I'm going to throw in there is 14 days. So the Fair Credit Billing Act is responsible for the 2-week time period that you get from the moment that you get like your credit card statement to the moment that it's due. You have 14 days notice before your due date, thanks to the Fair Credit Billing Act. All right. And then the Fair Debt Collection Practices Act protects you against abusive debt collection practices. Let's see. Miss Shantae, are you there?
Yeah, I have a question for the FCBA. You said that it's 60 days to dispute. You said three numbers. 14 days for the notice before the due date, 30 days for them to respond, and 60 days. And you said another.
60 days for you to file the dispute. You have 60 days to file a dispute, and then 90 days for the creditor to investigate.
90 days. Okay, thank you.
Sure. Yeah, hold them accountable, y'all. Sometimes mistakes happen. People are people, and we're all out here peopling. So, all we can do is protect our rights as a consumer and understand that yes, when you do get debt that is in fact yours and it becomes delinquent, there are several resources like National Debt Relief, Green Path, financial advisors, and so many other community partners that have financial coaching, financial literacy classes. And then here, I'll take this opportunity to say credit repair. What is it? When you pay somebody to fix your credit, I'm gonna do air quotes because fixing, a lot of the information that I've covered just now as your rights as a consumer should let you know that there isn't an easy fix, right? And as a housing counselor, my job is to tell you that our goal is to increase savings and reduce debts. So if you're paying for a service to fix your credit, how much is it setting you back from your housing goals? And is the debt that is being disputed, in fact, your debt? Question 1. Question 2, when they're done disputing it, what's going to be the impact to your credit score? When they find that, yes, that debt is yours, right? And so when you pay a service, you have to understand, like, what are y'all doing? Regardless of whether you pay or not, right? When you do pay, you are an investor. You're investing your money into this service. So really asking questions on how they practice repairing your credit really matters. And then I'm here to let you know that all of the disputes can be handled individually by yourself, and it is free. Like you saw, each one of these, this credit report, let's just say it's yours, but like every single line of credit will have a creditor number, and if they don't have a number, they have a PO box. So really, you're paying somebody to review your credit report and dispute any lines of credit that you are claiming are not yours, or that you don't know what happened, or a difficult situation happened. Like sometimes I have clients that share like they had terrible experiences with lease companies that are like abusive in the charges that they do. If you feel that you have a claim, go and file a dispute. Ultimately, you understand that there's a 90-day investigation, and so it cannot be guaranteed that it will be removed, right? So have I remember like a few months ago I lost my wallet, and somebody picked it up and they used it. They used my two credit cards. One credit card they used for like $500, and then the other one I can't even remember, like 400 something. And the bank, once I filed that, that this was fraud and this was not my charges, they immediately credited me that money. Similarly, when you're filing a dispute, for the moment, it's frozen and it's like in limbo. So it'll impact your score and it'll show an increase for 90 days until that investigation concludes, if in fact it is yours or not. Does that make sense? Thumbs up in the chat if y'all can hear me. Thumbs up. You can use emojis. Okay. Use emojis. Drop your favorite emoji in the chat. We're almost at lunch, you guys. So Miss Trinity has a crying face. Okay. That's me. Same. Thank you guys for listening. So it really is important. You guys have so many rights, and it's imperative to really know, like, my job is to get you to achieve your ultimate housing goal. If that means renting at an affordable apartment with awesome perks and amenities, let's go for it. But the same concepts are going to apply. How much is your net? What are your living expenses? What are your debts? And how much is your surplus or shortage, right? Because regardless of if you rent or if you own, savings are necessary to sustain you in the event of an emergency, loss of income. COVID happened, y'all. So many people were laid off. It was a time. I mean, we suffered through a pandemic together. So we just cannot predict what will happen. We can prepare our cash reserves so that we can, at least for 3 months, have no impact to our living expenses, or God forbid, like you go into debt with your mortgage. At the time I was working for a different organization, and there was an angel donor. That's what we call them because they're anonymous. But there was an angel donor that came in about a year after COVID and was like, who's delinquent? And they paid off the debt. That doesn't happen every day, right? And so you should know that there is foreclosure intervention assistance, and that is very limited assistance. It can be very tedious and very stressful to see your home going in a foreclosure sale. So we're here to teach you concepts that will help maintain your asset, and you will be able to thrive. You will thrive, and you'll be a butterfly. So you'll be a thriving butterfly. I have a question here from Trinity and Adriana. Yes. Well, the question is, do you guys partner with vouchers or Section 8, third parties like that? Absolutely. And when you ask partner, we partner in the way that we prepare their clients, right? So a lot of what's it called? Houston Housing Alliance and PHA authorities send their clients over for our class, for counseling, I have several clients right now that are trying to use their or want to use their voucher for the home buyer program. So it is important to know that that is a program, and with every program, there's eligibility criteria and certain requirements that fit within that program. Okay, so it's important to understand, like, realistically what access you have and to which program you're going to be eligible for, and we as counselors can help make that assessment. Okay. So let's see. I was told, I have a question in the chat from Diamond Nisha. I was told that checking your credit brings it down. Checking your credit when it's a hard inquiry, kind of like my client with the mom-daughter car shopping. The daughters had a hard inquiry, right? And so, yes, it will impact your score at 10%. So when we look at those 5 grading categories, it is going to impact your score at 10%. And actually, you know what? We are in a really good place. In just a few minutes, we will, break for lunch. But in the meantime, I'm going to stop sharing for just a second and bring up my handy dandy FICO wheel. And I'm also sharing this in the chat so y'all can see what I'm looking at. And I'm about to share my screen now. Okay, I'm giving you a glimpse of counseling, right? Because this is where this is our backbone for everything. I just shared this article in the chat for y'all. But we always will come back to this. This article in particularly is on the how scores are calculated tab. These are credit mix. That's what I kept forgetting. Payment history, amounts owed, new credit, length of credit history, and credit mix. So y'all, I had a client tell me that her realtor told her to open up new credit cards because it was going to reduce her debt and increase her score. What do y'all think happened? Has anybody else heard that? Raise your hand if you've heard that if you get more credit cards, your score increases. Ms. Lakeisha said it went down. Stephanie said it dropped down. Miss Melissa, do you want to share with the class?
No, but that's what I heard was it would go up. But I know looking at your credit's going to make it go down.
Yeah. It's a tug of war. So by applying to new lines of credit, now, yes, her available credit grew, right? So whatever debt she had automatically shows, like, okay, so if she owes $10,000 and she maxed out those $10,000 by getting a line $5,000 lines of credit, now she has $15,000 available and $10,000 of debt. But she still has $10,000 of debt. So unless she brings that down to 30% of that new $15,000 available, it's a tug of war. You see what I mean? So yes, you can get new credit. And you can see here, this algorithm doesn't change, y'all. This FICO score model is the algorithm that calculates your score, and it is not going to change. Payment history is 35%. Amounts owed are 30%. Together, they make up 65% of your score. I emphasize this because when you add the other 3, when you're looking at the other grades, new credit, length of credit history, and credit mix, those are only 35%. So regardless of what you do here, it will not like mathematically, it will not carry the same weight than if you continue to make your payments on time and reduce the credit utilization to 30%. So it's an algorithm. And so when I explain it as a GPA, you guys nailed it. Like the advice that the realtor provided, while it does reduce the overall debt, as you can see, unless the debt was significantly reduced to 30%, that new credit one shows as hard inquiries, right? Because she's been approved for all those new lines of credit. So they're hard inquiries. And then now she has only 10% of her score that has increased. So 10% against 65%, you can see is a huge tug of war, and you can tell who's winning, right? That 10% is not going to win that tug of war. So it's really important to just understand that it is an algorithm. Credit is credit is credit. If it's your credit, let's work on it. If it's not your credit, let's work on drafting up some dispute letters. But it really is an empowering moment for you because this is where it all begins. Like it really, this is your journey. And like I said, you guys are metamorphosizing, and this FICO score model is our backbone throughout the process, because you will also be able to understand how your overall credit history tells a lender that you're ready for a mortgage loan. Okay? And sometimes you can have bad credit, like some people have charge-offs, some people have collections. So we teach you about which charge-offs you can start working on. You can get referred over to financial advising as well, financial coaches, for more credit counseling. Specifically, there's like certified counselors for that as well. I'm a HUD certified counselor, so my goal is housing specifically. So all of this to say, there are also I get a lot of questions about like, well, that's not the score that I see on my end when I pull the report for Experian. So I don't know what cars y'all drive, right? But I drive a Nissan Sentra, and I know that I can buy a Nissan Sentra Sport, Nissan Sentra SE, several different models of the same vehicle, right? Similarly, FICO has 3 bureaus of credit. And then all of these, like Experian, for example, like look at all of the versions that there are. So if these are the make, Experian, Equifax, TransUnion, they're the make. These are the models that are available. So that's why you'll see a variance of your scores. And why lenders use a tri-merge report to calculate all 3 credit scores. Miss let's see, Alexander. Miss Melissa says, wow, I did not know that. Stephanie said, asking for a credit increase on your existing credit card. Will asking for a credit increase on your existing credit card affect your score? No, because it's already a lender. Like you're already working with it. You're just asking for an increase. So it's actually going to show on your when you increase your credit line, yes, you do have more money to spend. It's also debt, right? So it's not like, how can increasing your line of credit help when you're trying to reduce the amount you owe? So if I'm looking at your debt and I'm saying, hey, right now, based on all the credit lines we're seeing, there's 80% of credit use. How can we reduce that? One recommendation would be, can you call any of your creditors to increase your line of credit? Don't use that new line of credit or like that increase. Keep working on paying down your debt to 30%, right? But in the meantime, your amount owed will benefit from a line increase because your debt will show as less compared to that higher line of credit. All right, lots of things to learn. So you guys now have the backbone like to build from, and really pay your payments on time. Keep that credit line to 30% use. And it's not something that we openly talk about, like as a society, right? Like, what's your credit score? Like, we're not at happy hour talking about our credit scores. So definitely, a lot of information that we're sharing today, it could be your first time hearing it. That's perfectly normal. We are not at happy hour talking about our FICO model, right? That would be me though. If you go to happy hour with me, I'm gonna talk to you about your FICO score model. And Avenue is also working on making this a point of education for young adults. So stay tuned for more. Okay. Any questions? It's 11:47, y'all. We can open up back to the presentation. And for the next 2 minutes, give me 1 second to check in with Rosalia for just a minute. Rosalia, how are you feeling about a Q&A before we head to lunch? Open for questions. I will jump into chapter 5 after lunch, after Cheryl. Oh, can you guys see my screen? Okay, cool. Sorry, Rosalia, I didn't hear you. Oh, people are saying yes. Oh, I see butterflies in the chat. Okay. I'm gonna go ahead. This is a good, just let's start discussing. You guys are welcome to come off of mute. Just be mindful, respectful of each other, and try not to talk over one another. But you guys can start, and I can call out. I can call you out. So, yeah, let's open it up for Q&A. I'm happy to answer any questions for the next 10 minutes as we prepare to wrap up for lunch. Let's see.
Question.
Okay. Hi, Miss Stephanie.
After we take the class, how long does it take? Like, is there a waiting list to take the counseling session?
Right now, there is not a waiting list. So, Rosalia, are you able to share some of the process that they can expect at the end of the presentation? I think she might have stepped away for a minute. Okay, probably with a client. Okay, so to answer your question, we will cover the process at the end of the presentation, but really the next step would be to schedule your appointment, and there's going to be a second set of intake documents. So, we will connect you with our client services coordinator to set up your first pre-purchase counseling appointment, and we can take appointments as soon as you complete your intake. Again, we really want to see your income, so we'll have to ask you to submit income pay stubs or your tax returns if you're self-employed, and then you have to prepare your budget. So without those items, we won't be able to schedule your appointment. So it's just something to keep in mind.